Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on May the 13th, 2020 with a daily Forex market analysis and live trading breakdown for you. And real quick, we just want to have our disclaimer up to show you that this webinar is for illustrative and educational purposes only. Remember, this is in a slight delay, so this is not completely in real time with the markets because we have to because of the quoting rules. So please don't try and chase or mimic the trades. If you want to learn how to actuate these trades and become a subscriber to our signal system. Otherwise, just use it as a means to learn on different ways to manage your trading. So with that, let's go to our live website here at forex-trading-unlocked.com. We have some numbers that are coming out. We have the oil numbers that are our Thursday oil numbers coming out later, and we also have some numbers that affect the yen, which we'll be talking about because we have a signal that was triggered last week. So the dollar index, as you can see, has been wedging and is pretty much contained within this range, and especially over the past few sessions, you can see that it's basically gone nowhere. It's up, down, up, down. It's a range trader's delight and a swing trader's nightmare, at least as far as the index is concerned. And now we're going to show you why it's starting to shape up like that. So the euro-US dollar, the number one component in the in the dollar index, is gaining a little bit of strength over the past couple sessions. You can see yesterday it had an outside day closing higher, and is maintaining a slight little bit of strength from the low that was set last week. Now, are we bullish? Not really. If you really look at what's going on with this market, you can see that the euro-US dollar is actually being pretty much contained. And let's draw a little horizontal support line here. So let's make this a little clearer for you. So if you check out this line, you can see this is pretty much our baseline. And then if we put this in here, I mean, you can see mostly the bulk of the trading for the past few months has actually been contained between 107.76 and 109.90, basically 110. Obviously, we've fluctuated because of this volatility, but once the volatility began to drop, you can see that we started to settle with the directional intent of falling into this range. You know, we rallied significantly in March, fell through this range, but you can see how it fell through support here, and it came back very quickly and was even volatile on those trading days, trying to hold above that line. And then even when it gets above here, that's when it runs out of gas. So pretty much I think we're finding this is our baseline for the euro-US dollar. Now, how long is this going to be? Well, I don't know. Until we get a true signal and get a breakout, it's going to be hard to really manage this right now. So right now, the market is wedging. It's consolidating within a, pretty much a $3 range, $2.50 range. And remember something. Before this volatility from the coronavirus this year, the euro-US dollar had basically been contained in a $4 range for a year to begin with. So for it to be trading like this, it's almost like, bam, it's gone back to the normal that it was before this whole outbreak. And also, we're starting to look at this as a consolidation pattern where if this is really what it is doing, think about September 11th, then you're going to most likely see the major currencies, especially like the euro, the pound, and certain, as we get through these, where they're going to fluctuate. Basically, they may have set their ranges for the year. Like we may be contained. What happened in March, this may be exactly what's going to contain the euro-US dollar for the next, could be 3 months, could be 6 months, could be the next 2 years, literally. So we need to wait until we get a breakout so that way we can start to get some signals. Otherwise, range traders are having a field day on this one. Just to show you some more indecision for you, let's look at the British pound US dollar. This one here, I mean, it's got a head and shoulders formation that it just doesn't want to seem to make happen. So here, if you look at this, we have a neckline. It settled below this 2 sessions ago. Yesterday, it confirmed a lower move low, and then now here, look at where we're at. It just is trying to hold this level. So that's the big question is if these markets are consolidating, and this really is not a head and shoulders pattern that's forming here. This is the range that it's setting for. And like I said, what if all of a sudden we even had the same thing where the March volatility contains this currency for the next 3 to 6 to even 12 months? Does that mean it's only going to hang in this range from here, from basically, what is this? We have 126.57 down to 121.59. So basically a $5 range. Could it be contained in there? Oh, absolutely. We remember we have Brexit that's still going on. The EU is now having a little bit of strife with the ECB versus countries in the EU because of the means in which they want to prop up the economy. Germany, the biggest powerhouse, being one of the biggest advocates of not doing what their plan is unless they can prove that inflation will not creep in. And that's inflation is a very bad word, especially in a country like Germany. I think that this consolidation, like we're seeing here, this is giving us more indication that this is more of the same. Now, the one thing we have with this is that since we have this head and shoulders formation, if the bears don't take out this swing low right here that was set back in April, then we don't have the sell signal. Then we have the containment of this range. And then if we get back above this upward sloping support line, this neckline, well, then we're right in the center of the range where we've been now for 2 months. So really, you have to look at the only upside breakout would be from this high, which was the head for this head and shoulders. So like I said, 126.57 up here, and then we're containing it down with this swing low here at 121.59. So more sideways to come, right? We don't have a signal, but let's see what happens. Who knows, over the next couple days, maybe we'll get a breakout. So now the US dollar Swiss, which is one of our flight to quality currencies in the globe, what is this one doing? Well, this one, talk about wedging. This one is in the same type of a boat as the other currencies, and I would say that definitely, maybe not the whole March volatility, but definitely these 2 points here are going to contain this market for quite some time. With instability in the EU, especially with Brexit and everything else going on and the coronavirus, I think that the Swiss right now, although its flight to quality is only going to have so much strength because it's going to be weighing on it because it's still part of the EU. It's in the European trading zone. So with that, it's going to be hard for the Swiss to really gain strength. And then also at the same token, as the dollar, as it runs its course with the coronavirus fundamental, it's probably running out of its gas too. That's why we're having that range being set by the dollar index. So we had a slight little buy signal last week. It hit its target, and this is the thing is now that we're in these range-bound areas, even when we get buy and sell signals, we're running out of gas. There's not much to go on there. So we really need a breakout to make something happen. So we'll see what happens over the next couple sessions, but I think until we get probably through the month of May, we're going to see more of the same. Now, this is not always the case in all of the currencies. So let's look at the US dollar versus the Canadian dollar. Let's go to the US trading zone. What do we have here? We still have this gap to fill down here from March, but then we're being contained once again in this one. This was one of the currencies that really started to become range-bound first. You can see that this trend was super steep. The slope ran out of gas. We've fallen down to this level where we set these lows back in April, and we nibbled on them a couple weeks ago, but as you can see, this is kind of like the other ones. We found support, and we've also found resistance as far as the dollar versus these major currency crosses. So unless we have any earth-shattering news that comes out either geopolitically or politically within some of these different countries that represent the currencies, I think we're going to see more of the same. So right now, this one here is another, if you look over the past week, where's the Canadian dollar gone? Pretty much nowhere. Range trader delight, swing trader nightmare. Now here's another one. Speaking of, remember we had the head and shoulders in the British pound, or an overdone rally. This one shot up just like the US dollar Canada did with major volatility, and then it set its range. And now we have this one also where we're keying off of this head right here and then also this low right here. So if you take these two, and then let's put our trend line in here, you can see that this is doing exactly what the pound did. It came through the neckline, and now it's bobbling around here. So I think even with the Mexican peso, that it's finding a consolidation range. So the head and shoulders is not coming to fruition here. Now the interesting thing, though, is that this head does give us this wedge. What does that look like? Kind of like the dollar index, doesn't it? Of all the currencies, it looks something like the dollar index. Even the Mexican peso over the past month is fusing into this consolidation wedge. Now, this means that all these currencies, the coil is being wound up. So which way is it going to go? Well, let's see. Well, if we have some major treatments that help to mitigate the coronavirus impact globally, I think you're going to see dollar, not weakness come in, but dollar selling as other currencies start to regain some strength, which would be good. We don't need to have the dollar as strong as it is globally, because in the long term, it's going to hurt us on many other fundamental economic variables. So this market is also, like we said, we have this head and shoulders where it came through the neckline and then it bounced right back in. It's going sideways, so we really don't have confirmation here. And unless we really take out this low at 22.85 pesos right here, I think we're going to be contained in this range at the very least. And even if there's a resurgence of the coronavirus globally, especially, then I would say that we're going to have the U.S. dollar strength come back, and that's when resistance will be challenged once again. Now, here's a market where it's not quite the same as it is with all these other ones. The U.S. dollar, Turkish lira. You want to talk about a currency that has been just ravaged by the dollar? Well, look at this sell-off. We hit a high the last week, and over the past couple sessions, and even in today, look at it's on its lows. So that's the big question. Has the dollar run its course for strength? Probably not. I think that until we have, like I said, a confirmation of mitigating treatments that will help, especially lessen the severity of what happens to many patients that receive or contract the COVID-19 virus. So until those variables are there, I think the dollar is still going to remain strong, especially against something like the Turkish lira, where Turkey has definitely been growing, and its curve is, I think, starting to slow, but it's being very damaging. And also, look at this. This market has had only a few corrections in this big run-up. I mean, this market has been a raging bull. I mean, if you look at the levels and the devastation of this slope, it just kept grinding higher. And this is a correction on pretty much like the last few that we had along this climb. And then we also have, look at this. If we put this little support base here where it was grinding around for basically almost 2 weeks, buffering on these highs, well, we've spiked up above it, and now we may actually start to settle into this again. I'd be very cautious about seeing whether or not this bear is really going to be a bear. I don't think you're going to see a major correction. I mean, you could. Anything can happen. But right now, there's so much bullish momentum. It's unlikely that the U.S. dollar, at least with this currency, is going to really sell off in a big way. Now, it could start to set a range. We may have seen the top now for a period of time, but it doesn't necessarily mean that we're going to be a bear. Remember, this isn't a bull market, so we're set up for a bearish correction. To what extent? Well, I would say probably one of the first keys you'd have to key off of right here is a low, and then also this swing low here. And then also, I mean, basically just use these swing lows. This would be the ladder of support to where we can expect probably to find a bounce. Failures from here, then especially as we make lower move lows, remember, higher move high, lower move low sets us up for neutral. We still need to get a balance, set a lower move high, and then a series of lower move lows to confirm a trend change. So we haven't had those conditions happen yet. Now, markets tend to go out like they come in. So if this is the short-term top, let's make this a little bit clearer with a dark line. I'll make it dotted. Okay, so let's just say that this is our midpoint for the turn. And maybe this is an indicator for the dollar as it starts to give back some of its strength versus the global currencies. If the coronavirus is waning and economies are coming back online, countries are coming back online, that would indicate most likely the dollar sell-off, and this correction would probably come back to these areas here. Now remember, the spread in this currency is very wide, so it's not an easy currency to trade. So let's look at the Australian dollar, US dollar. Now this market had been correcting for the past 2 months, and now this one's starting to go sideways. Now this one was a major bear, obviously, but now it's headed into its consolidation trend. So that's another reason why we're starting to see where a dollar strength, where it had been so prevalent over basically for 2020 up until the last month to month and a half, depending on which currency it is, we've stabilized that over-exuberated sell-off that came because of we didn't know where we were at. We still don't know where we're at with the coronavirus numbers and how things are going to actually shape up, but at least we are starting to have some clarity, because the more time that goes on, the more numbers we have, the less the fear is and anxiety is, and things like that. So, and that's also before we start to really get a new trend, whether it be bearish or bullish. Now is the time really for markets to consolidate. It's kind of like a big aftershock a hangover from a big party. We had this major upsetting volatility that rocked all of the markets, and now it's like, okay, everyone's like, we need a breather, and try and figure out, because no one knows where we're going. I mean, you never know where you're going anyhow, but now with the uncertainty with everything, we have variables in a way that we've never encountered this, so everything is an educated guess. So the question here now is the New Zealand dollar, US dollar, maybe now we're starting to see some divergence of these other currencies. Since the dollar's coronavirus trade is starting to come off the table, these currencies will start to have moves against each other. So like I'm saying, the Australian dollar and New Zealand dollar were trading in tandem. Now they're starting to have a little bit of divergence. So when you see things like that, just to give you an idea of what I'm talking about is, let's take a look at the New Zealand dollar, Australian dollar cross. Look at this trend. New Zealand dollar has gotten hammered today. Look at that. Look at that volatility. Newer move lows. And this is where I'm saying we probably are going to start to see divergence in other currencies. So some of your other crosses may start to get a lot of action, because where's your opportunity? You're going to go where you're going to get your signals and where there's a trend that's going to occur. This one obviously is still getting buried. It's getting hammered, but that doesn't mean that this isn't going to bounce. But this is also a good indication of divergence. So let's go back to Australian dollar, US dollar. And you can see how this has been strong versus the dollar. And it still looks like it's it's making higher move highs with higher move lows. What is that indicative of? A bull market. As long as it keeps that, it's going to keep going to pressure resistance. Now let's go back to the New Zealand dollar, US dollar, and you can see that this is not the same situation. We have been making higher move highs with higher move lows, but not as exaggerated or as trending as strong as the Australian dollar had been. And now we've had a higher move high with a higher move low with a lower move high, and now we're potentially about to make a lower move low today. So this is where we have a divergence of currencies, and this is where we have a potential trading opportunity. So if you're looking at it where we just looked at that New Zealand dollar versus the Australian dollar, let's say that trend continues. If we have a neutral Australian dollar, US dollar, or even a stronger Australian dollar, US dollar, then that helps to maintain Australian dollar strength, which also means that the New Zealand dollar was to remain weak against the Australian dollar. And if it's weak against the Australian dollar, it's most likely going to be weak against what currency then? The US dollar, right? Because the US dollar is falling against the Australian dollar, but not as severely. So does that mean we're going to have a major sell-off? No, by no means. But we may start to see where at least you can pick the point of where the market's going in its consolidation. So where the Australian dollar, US dollar is buffering resistance and pressing the upper part of the range and continuing to lift it, this one here is now looking to test support. Most likely, just because what happens right now, we had made a higher move high, higher move low, lower move high, and then once we make right now we're in neutral territory. Once we make a lower move low, well then we have a short-term bearish trend, neutral trend, setting us up for a test of support. So right now, range traders, I think you're going to be in a good way, especially selling into resistance, into higher, newer highs right now. I think you're going to do well, and even if you buy into lows, you'll probably get the bounce if it's stabilizing. So this is another trade that we're looking for. Now, here's where we had a signal the other day, and this is another reason why we're starting to think that dollar strength is really setting in its range. So the US dollar had been falling slowly against the yen for the past month and a half, making lower move lows, lower move highs. We had a buy signal last week here. We had this 3 inside up. So if you see this last low here that was set on this down day, that would be the first of a 3-day pattern. The following 2 days, that gave us our buy signal. We had a nice rally on Monday, and then yesterday we came back. Now today, most likely what this is just a corrective dip before we make a new high. The reason I'm saying is, look at it, as we were making the higher move or lower move highs, lower move lows, we have our buy signal. We took out this high right here. So now we have what? We have a lower move low with a higher move high, giving us what? Neutrality. Okay, now even if this is a neutral market, most likely we're looking for support for the lower part of where we're at. Look at how we have support here. Boom, boom, it fell through here. Now we breached it with this higher move high. We're hovering right here. This is a key area. So if we can hold this strength today and then make a higher move high again, what would that mean? That would mean we have had a higher move high with a higher move low and then a higher move high, being what? Setting us up for a nice bullish move. Now, are we looking for a big rally here? By no means. No, not at all. If anything, we're looking for most likely a challenge of the upper part of this consolidation range. So get us a pop above 108.08, and then we'd be looking most likely for a breach of this last swing high at 109.43 to confirm any real bullish action. But remember, this market was going sideways, grinding higher before all this volatility. So maybe now we've lowered that baseline, or maybe we found that baseline, and now dollar strength, we'll start to see a trend here. So we'll have to see how this manifests. We do have this buy signal, and it does have us targeting this 108.808 area. And just to let you know, a couple days ago, we put on our US dollar JPY greater than 107.75 strike price trade. So that expires on Friday. Right now, it is slightly lower because we're trading just below 107 even. In fact, let's put this in here so you can see what we're talking about here for the trade. So for 107.75, we're going to put that right there. But let's change this color. So we'll make it black, and then we'll make it dotted right there. And then we got to change this to make sure we get the pricing right, because it's 107.75. Okay, coordinates. Okay, let's change this to a 5. There we go, 107.75. So that's our strike price. And if we get a rally above here, so if our higher move high, if we hold support here and then we get a breach here over the next session or two, that will put us in the profitable range, and we'll be able to get out of that option with a nice little winner. And there's really not much further for it to go back up. We were just hovering on these highs for the first 2 days of the week. So if this is just a short-term little profit-taking move, and then as we build a base with the bulls, then we can probably see another higher move high here. So here's the one trade that we have on for the currencies. Remember the rest of these other ones, and let's see where they're trading now since we've been talking for the webinar. Yeah, see, look at the euro is stuck in the middle of its range, and it's not doing very much. This is right after the U.S. Open. I would not expect very much out of it at all today, but I think, like I said, the U.S. dollar yen is probably one market where we do have a trade, we do have a signal. It looks like we have a good shot at it still getting another run at resistance. So with that being said, if you want to learn more about that trading signal, the 3 inside up trade, you can check out a book called High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And this would be Forex markets, futures markets, option markets, ETFs, stocks, options, binary options, you name it. You can integrate these patterns successfully into many different markets and that you trade. So with that being said, please subscribe to our YouTube channel, Forex Trading